Straight to our top story then. Mumbai Real Estate has just got a fresh vote of confidence. IPAL fund managers headed by Ramesh Jogani has raised 175 crore rupees from HNI investors with a clear mandate to buy into the Mumbai property market. But here's the interesting piece of information. The fund expects a return of 20 to 25% on this investment. My colleague Aishwarya Paliwal has this report with all the details. Take a look.
Ramesh Jogani's IPAL has raised close to 175 crores for their fund called Residential Opportunities Fund 1. This fund has been raised only for Mumbai and has been raised with the help of a lot of HNIs. For investing, this fund is looking at areas like Parel and Goregaon and will be investing in under construction properties which will range anywhere from mid-income houses to the luxury category. They are looking at doing purely equity deals. They want to fully exhaust this fund in the next 2 to 3 years and are looking at a return of anywhere between 20 to 25%. Now with this fresh inflow of money into the real estate industries, it opens up new avenues for home buyers like you and I. People who want to buy homes will now get more options to choose from.
More options to choose from. So good news for home buyers. To give us more perspectives on this, we are being joined by Ramesh Jogani himself, Managing Director and CEO of IPAL Fund Managers. Mr. Jogani, thank you so much for being with us here on the news and Magic Bricks. Now I will start by asking you about this particular fund. It's a tough market for realty investments. How did you manage to raise money for the Mumbai market specifically?
This is a domestic fund. So most of the money has come from the major metro cities. That would include Delhi, Bangalore, Mumbai, and a few from cities like Surat and Baroda, and some money from Calcutta. But most of it has been raised domestically, and we cannot raise money from offshore because it's a domestic fund. But there's been a new guideline which says NRI can invest, and we've seen a lot of interest coming from the NRIs, but unfortunately there's no clearance on the tax part, so we are waiting for that clearance, and hopefully we'll have some money coming from their NRIs in the near future.
All right, Mr. Jogani, the thing that struck us the most is that you are looking at a return of 20 to 25% on this investment in this economy. Don't you think the 25% return is a little too much to ask for?
The way our strategy works is we are going into under construction, and it is at a late stage construction, so where there's no approval risk. A lot of work has already commenced on site, and what we have seen, and that's why we've evolved our fund around this strategy, is a huge discount from ready possession to under construction. So if you look at Parel, for instance, the rates of ready buildings are 45,000 and even more, some of the buildings, and the under construction in the same vicinity is available at 20 and 25,000 rupees a square feet. So what we are doing is capturing on this arbitrage, where as the project matures, the prices keep going on. So it's non-speculative. We are only taking advantage of the liquidity crisis, poor sales, and obviously we'll be looking at developers who have a track record. So we are very, very confident of achieving those targets because it's not purely speculative. And secondly, we are not depending upon prices to rise further.
All right, Mr. Jogani, so you're quite confident of this particular 20 to 25% returns. Now, you've chosen the equity route for this particular investment. Why do you think that equity is better?
This would be pure equity. We do not believe in debt because we believe that debt has the risk of an equity. And in a debt structure, you kind of cap your income. So basically, if I were to give a debt to a developer, it would be 18%. And after taxes, it would be 12%. And after fees and carry, net in the hands of the investor would be 10%. So, and being a long gestation investment, I think, then you might as well go for the equity where you enjoy the entire upside. So our fund is basically for equity.
All right. I'm afraid we'll have to let you go, Mr. Ramesh Jogani, Managing Director and CEO of IPAL Fund Managers. Thank you so much for taking time out, however, to be with us here on the news on Magic Bricks Now.